to Trading Lounge and the Bitcoin report for the 20th of January. And just a quick update, not a lot has happened, but we have pushed off from this low here if we were going to look at this as 1 and 2 here, and then 1 and ABC for wave 2 here. Now, I mentioned last time we spoke that this particular low here, if that's breached, then obviously that destroys that structure. We could lift it up to this low here. But now we could also lift it up to this low here, and the reason for that is that there's 5 waves in this particular structure, and there's also 5 waves in this particular structure, and there's also a possible 5 wave ending in this structure here. So in Elliott terms, we can count this up, but if that's breached there, then this particular count needs to be thrown in the bin. So we could count this up for 1 and back for 2, up for 1 and back for 2, and up for 1 and back for 2. But I have to say, you know, last time we spoke, I said I didn't particularly like this wave 2 here because it was so much bigger than this degree of structure here, which is a larger degree of structure here. So this is not a very good count. But the reason I'm showing this for is because I started showing it, and it's valid until it's not, and at that point that low there would diminish this count. The other count that we got here, let me just go to the, I think it might be the hourly chart here. So this is the other count that we're looking at, and this is kind of a better fit really. We just get all this into, expand it up a little bit. So an Elliott wave triangle is a 5-wave structure with each leg being 3 waves. So we can look at this as an A and a B and a C wave for the A wave, an A and a B and a C for the B wave. Here that pulled up to 78.6, which is square root of 61.8%, so that's fine. And then an A and a B and a C here for wave C. And then here we've got an A, B, C here. We've got a 5-wave structure and a correction and a 5-wave structure. So we could label it like this here. So we can have an A, B, C for the A wave, back for the B wave, and then 1 and 2 and 3 and 4 and 5 finishing off here for wave C of D, and then coming down for wave E here. And that little box I've got here, that grey little box, if you can see that, that's the 61.8% retracement level for this. So that can move down a little bit lower, but it's sitting quite nicely on that trend line. But that trend line's not quite accurate as well. Not a big deal. When you do these in different time frames, they can also move around a little bit. This wave 4 triangle would be valid until the 35,000 is breached. So as long as that stays as support, then this is valid in that regard. Just checking on the volume, we can see that the volume here has got some divergence as that's moving up. We've got this moving down here, so it's just, we've got the stochastics here at quite a low point, which is kind of interesting really. So from this low here, we've had this one, and now we've dropped below these lows here on all of this here. So it's moving into a buying signal there. So that kind of helps validate the triangle pattern actually. We can have a look at the volume, and I'm not going to do it on this particular platform because it's a CFD platform. I'm better off looking at it on Binance, who's got the most volume out of the sort of 10 major exchanges. So this is a monthly chart here, and I think we went over this before, but this is also divergence as well. So we've got these bars moving up here, but these last ones here have got lower volume. So that's just divergence. That's what you would see on the people use indicators for, but you can just see it in the volume and the relationship to the price action here. So when you're reading volume bar by bar, it's the relationship between the volume bar and the price bar, and that means the range in this as well. So you can see that that range was quite strong, whatever it was, and then this one is more and this one is more. This one here closed up, I think it was 41 950, that high there up here, I think, for that. I don't normally use candles, but I don't know how to change this charting program into just bar charts, and I don't like all the colors. They tend to make you a bit more emotional. Anyway, the point here is that this trend is moving up and the volume's decreasing on the monthly here. So that's telling us it is divergence and there will be a correction, and we're in a correction at the moment, but it could get larger. So on the weekly chart here, just sort of breaking this down a little bit, obviously that's the high here. So we've got a fair bit of support coming in here on this weekly bar here. There was a lot of sell-off, but there's also buying as well. So yeah, so we're looking really at that sort of 35 mark, as I mentioned before, as a nice support in there for that. And 5 being the second strongest number, that is also helpful as well. 1's the strongest number, then 5, and then 8. So that's that there. We can also see, if we just go to the daily volume, we can see that we've also got decreasing volume over these days as well here. So look, all corrections are on lower volume. So we are seeing those lower volumes compared to the trend up here. We're getting lower volume in this correction here. Anyway, that's sort of something anyway, whatever it all is. So just coming back to this chart here. Now, as I mentioned before with this, is that in terms of my labeling here, I've got a big wave 3 here and a big wave 4 over here. So it is a wave 4 as such, but it's on a much smaller degree, this, because we're looking for further upside in this. So anyway, we're at a critical situation here. I mean, this could certainly be a more of a bearish picture unfolding here. We just need to see how that unfolds there, and if that breaches the 35 and comes down here lower, then I will explain about a bigger bearish picture coming down, because after all, this move down through here is what it is. It gives us that reference point on this major trading level here and a medium trading level, and then these are minor trading levels, just the Fibonacci numbers as price ratios 1, 2, 3, 5, and 8. So this here being corrective wave here, then it's quite possible in normal circumstances to look at this low here, because that's a corrective pattern, and then this would be breached here. So it's quite possible that this wave 4 can be dismissed, and we'll see a bigger bearish picture coming down through here. But we don't need to go there yet until we see 35 as a retested resistance. And a retested resistance is not when the price spikes down like this here. It's when it goes back and checks it, and if it fails and then moves down below the previous low there, then we can look at it as as that price point being rejected at that point. So that's a good way to short as well, because the market can come down sometimes and then get back and take out stops and then find support on that number and then move up from that point. So allowing it to drop through, going back and checking, and then taking the low out would be the short trade on that side. And if that's the case, we're going to be coming down further from that. We'll have to look at this as part of a larger impulse wave. But otherwise, we could just bounce from here now and move to the upside. So I suppose we should just, before we go to the bigger picture, I'll just go back to my 15-minute chart. We should really look at where we could actually go long here. I mean, as you may know, I'm not trading. I'm just building positions and just buying a bit each week. So I mean, there's more sophisticated ways to do this, but I just want to point out that if we gravitate, once we've got the 50-60% retracement level, always gravitate over to the closest largest number, because that really brings in the psychology of things. And you can see here that it's really just failed to find support on that level there. So in a nutshell, if it found support on that level, then you can move in on the long side for that. Now, I always like the 65 number, which will be the 36,500 in this case. if that found support, you could probably glean a small position from that there. Okay, but once again, it would need to become the support, and also you'll be exposed to risk as well in that case. So we'd see the market move up, react from there, push up, rest, and then push up again. So you want that the second high or that high there to move in on, and the same thing will apply in this pattern here, would apply to the 3700 as well. But you've got your head above water at that point. Okay. So we'll see how that plays out. Like I said here, this is an impulse wave, so that could go there. Now that's an impulse wave, that could go there. So as soon as that's breached there, you know that this particular count of wave 2 is not going to happen. So I want to just go back to the bigger picture just for a moment. I mean, we've been over this a lot. I mean, this is quite interesting too with the stochastics just on normal settings. We can see that this is pulling down quite nicely. It's like sort of the spring loading up, so to speak. So that's very healthy at that point. We know the 35 is the support now. We've looked at this. It looks like a bit of a pennant triangle sort of thing happening. So that's nice. We are seeing lower volt. We're seeing this on a bit lower volume now, which is good. But in terms of, I'm not really an indicator man as such. So I was thinking that this is a wave 4 of a further degree down, so it would still need to go up to this one, come back for this one here, and then push up into wave 5 up here, which to me would only be, because I'm looking at a bit more of an extension on this whole structure. So and then a wave 4 here and a wave 5. Oh, well, it's up there further, not to worry about that, one step at a time. Now 5 is the second strongest number, so we're definitely going to see some dance across this level here. So just another, I mean, I'm just dollar cost averaging, so I need time on my side, right? So I can shove more money in there each week or every second day or whatever. So the more time it spends at a number, more days and weeks, the more I can get in. So that's important to me. These trading levels would be important to option traders as well, because depending if what side of the equation you're on, you can burn the other side out in terms of time if you understand large numbers or the trading levels. So just to break this down a little bit further, I think I had it here. We're talking about this here. So we need to move that over here. Now, first of all, I don't know if this wave 4 is actually finished and correct. I mean, having that 3-wave structure up there is a little bit haunting, and we could probably look at all of this as wave 1 down here and back for wave 2 here, and then have a 3rd wave down, a 4th and a 5th. Probably not the case, but those hedge funds on the COT report, have got a bit of control over this situation. I know that there's not enough coins to be bought and all the rest of it. So yeah, there's a bit of a battle there on the main front. So let's just pretend for a second that this is correct. So we would see wave 1 and 2 and 3 and 4 and 5, something like this here. That's how I'm seeing it. But like I said, I can't confirm this just yet here. I mean, the move above 3,700 is a nice support. That's like a little solid step to the upside. From little things, big things grow. So that 37 is a nice tested support, creates that upside momentum from that triangle point of view at least. Alrighty, that's it. Thanks for tuning in. Cheers.